With the rise in the market, and I believe the SP 500 since February lows has been on low volume. Is it possible that volume no longer really matters?
No, I mean that's like taking a point and click model and saying, well, because from the low of February to the high of today, which is from a down 15% drawdown from the July before, and eliminating that point-to-point move, you can't just like this is. I know that these questions come from people that are in the business of permanently bullish marketing of the S&P 500. That's fine. But the reality is that you've had multiple declines on accelerating volume and you've had multiple bounces on decelerating volume. So what you want to do is sell when you're at the top end of the range on low volume so that you don't have to be the guy like, holding his nose at the lows saying, well, I didn't buy them at the highs. I mean, this is every day you have a choice. And we've not said that you don't want to buy securities on pullbacks. In fact, I do it all the time. I don't think I've maybe had less than on these three fingers things wrong on the long side in real-time alerts like all year. Never happened to me before. That means I'm probably going to get crushed for the rest of the year. We know how to buy things on pullbacks, but you can't just take a point-and-click model and say, okay, because the S&P 500 is straight up from the February low and I didn't call it going to the February low, then that means volume doesn't matter. That's absurd. I think that that's absurd, and I think that I'd be happy and open to have a debate with anybody, literally anybody, on how the mechanics of risk management should ignore volume across durations. Again, point and click from your precious point on what you want to call the return. That's called painting your returns or painting the tape. That's illegal. And the reality is that you can't do that. You got to look at everything across the entire picture. And the reality is that price, volume, and volatility and how they interact are always critical to risk management.